Think an FHA loan isn't for you? Well, I'm about to debunk the 7 biggest myths when it comes to FHA loans that might be keeping you from your dream home in Gainesville. And myth number 3 shocked even me when I first got into real estate. And if you don't stick around for the special program that just got released in Alachua County, you are literally throwing money away. FHA loans are one of the most misunderstood mortgage options out there, yet they're helping so many Gainesville residents become homeowners every single year. Today, we're cutting through the confusion with cold, hard facts about what FHA loans really are, who qualifies, and why they might be your ticket to homeownership in our Gainesville market. Let's start with perhaps one of the most persistent myths, that FHA loans are some kind of low income or welfare type loan. This simply isn't true. The Federal Housing Administration, FHA, does not set income limits or caps on how much you are able to earn and still qualify. Whether you make $40,000 a year or $140,000 a year, you can still potentially qualify for this loan. What matters is your debt to income ratio, or DTI, not your income level. You may be asking, why would a high earner use an FHA loan? Here in Gainesville, I've helped doctors, university professors, and successful business owners purchase homes through FHA financing. Why, you ask, would a high income earner go FHA? Because these loans offer benefits that appeal across all income brackets. Down payments as low as 3.5%, more flexible credit requirements, and competitive interest rates. I recently worked with a UF faculty member who was new to Gainesville. Despite having a 6-figure salary, she opted for the FHA loan because she hadn't yet accumulated a large enough savings for a down payment yet. The FHA loan let her purchase a beautiful home in the Northwest area with just 3.5% down, allowing her to preserve her cash for moving expenses and home furnishings. In fact, according to a local lender, Roscoe Parsley of the mortgage firm, FHA loans are better for those doing less than 5% down for the most part. Conventional loans really hit borrowers hard on mortgage insurance under a 5% down payment. FHA is a flat fee mortgage insurance, typically with better rates. The $10,000 in down payment assistance from the state of Florida usually cover the entire down payment. Here's what I mean. At 3.5% down, a borrower could go to a purchase price of up to $285,000, about $99.75 down, and use down payment assistance, and have the entire down payment covered with zero out of pocket. Right now in Alachua County, at the time of this filming, there are 895 homes in Alachua County that would qualify for this exact option. As inventory rises, we're also seeing sellers ease up on price and being much more willing to offer concessions in order to get their properties sold. So you could potentially get into your home with zero down payment. But I'm not even done yet. There's so much more you'll want to know. Here is another widespread misconception. While FHA loans certainly are popular with first-time buyers, there is no rule stating that they are only for first-timers. You could be buying your 3rd or even 4th home and still use an FHA loan. The only requirement is that you intend to use the property as your primary residence. You can't use an FHA loan for a vacation home or for pure investment properties. According to Parsley, the guideline is about having multiple FHA loans at the same time, which requires you to meet certain guides, like moving a distance greater than 50 miles, for example. The confusion is about being a first-timer and having more than one FHA loan typically. Basically, you can have only one active FHA loan at a time unless you meet all of the guidelines to have 2. Can't have 3. In Gainesville's current market, I'm seeing many repeat buyers turning to FHA loans because they sold their previous home and haven't built up their savings. Their credit situation has changed since their last purchase. They want to take advantage of flexible qualification standards. Just last month, I worked with a family that was selling their starter home they had purchased near campus and was purchasing a larger home to accommodate their growing family. They opted for an FHA loan on their new purchase, despite being experienced homeowners, because it allowed them more purchasing power in Hale Plantation, where they ultimately found their perfect home. Myth number 3, FHA loans are more likely to fall apart than conventional loans. With FHA loans only requiring a minimum of 3.5% down and being backed federally, there's a nasty rumor that FHA loans are a lot harder to close than conventional loans because of some unnecessary hoops that you have to jump through in order to get an FHA loan closed. This is so false. It all comes down to the buyer, who their lender is, and how qualified they are. And this is where realtors make magic happen for their clients. By knowing the strength of the borrower, it makes everything on an offer so much clearer. If I'm working with sellers and we're reviewing an offer, a call to the lender makes all the difference in the world. Sometimes a borrower using a conventional loan might just barely be qualifying, which ultimately could lead to bumps in the road or to a transaction falling apart at the last minute. If I'm a seller and I'm looking at 2 different offers, one with a conventional loan, but the borrower is just barely qualifying, or an FHA loan where the borrower has super strong numbers, if the condition of my property meets FHA requirements, I'm going FHA all day long. In my conversation with Roscoe Parsley of the mortgage firm, he said a good lender can issue just as strong of a pre-approval with FHA as conventional. FHA appraisals are a bit more tedious than conventional, but it's not crazy. Peeling paint and excessive wood damage are the 2 biggest culprits that come up on FHA appraisals, usually easily fixed. Many of the myths of FHA transactions being more difficult do relate to the appraisals. What you need to know is that an FHA appraisal sticks with the property for 6 months. So if the deal falls apart and you take another FHA offer, that appraisal is going to stick for 180 days. If, however, the next buyer that comes along is VA or conventional, a brand new appraisal is going to be ordered. So if you're a seller and you're debating between offers and one of them says FHA, don't let that scare you away. Talk to your realtor about the condition of your property, because if you've got a well-qualified buyer with FHA, you could conceivably have an extremely smooth transaction. This next myth is not just wrong, it's actually the complete opposite of the truth. FHA loans were specifically designed to help those with less than perfect credit access home ownership. Here are the actual credit score requirements for FHA. With a credit score of 580 or higher, you can qualify with just 3.5% down. With a score of between 500 and 579, you may be able to qualify with 10% down. Compare this to a conventional loan, which typically requires a credit score of 620 or higher, and you can see why FHA loans are accessible to a broader range of buyers. In Gainesville's market, this flexibility is invaluable. I've worked with numerous clients who thought that home ownership was years away, only to discover that they actually could qualify for FHA financing right now. For example, a young couple I had helped had credit scores in the very low 600s due to some student loan issues during college. Conventional lenders turned them down, but they were easily able to qualify with FHA loan and then purchase their first home right in Northwest Gainesville by One Love Cafe. Just a few years later, they've not only built equity in the property, but they've also improved their credit by doing nothing else other than just simply paying their mortgage every month. If this sounds like you, keep watching, because in a bit, I'm going to share some of the best news for any buyer out there who loves free money. Many buyers assume that they'll pay much higher interest rates with an FHA loan rather than a conventional. This is just simply not true. In reality, FHA loan rates are often comparable to, if not lower than, conventional loan rates. This is because the government insurance behind these FHA loans reduces the risk to lenders, so they can offer buyers more competitive rates even if they don't have as high of a credit score. Looking at recent trends in Gainesville, FHA rates have consistently remained competitive. For example, at the time of this filming, a 30-year conventional loan would come in at about a 6.71% interest rate, while an FHA loan would be a 6.13% rate. Now, the rate difference between FHA and conventional loan for super well-qualified borrowers is more minimal. But for buyers with any credit challenges, FHA rates are going to be substantially better than what they could get for conventional. I should note that FHA loans do require mortgage insurance premiums, MIP, which include both an upfront premium and an annual premium. This is different from private mortgage insurance, PMI, which is required on conventional loans with less than 20% down. The cost structure is different, but when you factor in the potentially lower interest rate, many Gainesville buyers are still coming out ahead with FHA financing. According to Parsley, FHA loans have reduced the rate of their mortgage insurance monthly premium, making it more competitive than conventional with down payments under 10% for those with under 720 credit. So essentially, a conversation with a good local lender is going to bring you clarity. They're going to look at your numbers, your situation, your debt, your credit, and help you determine the best pathway forward, because it very well could be an FHA loan. Myth number 6. FHA loans are hard to obtain if you're self-employed. Gainesville has a growing community of entrepreneurs, freelancers, and small business owners, many of whom have the false belief that because of their self-employed status, it's going to be impossible for them to get a mortgage. While it is true that self-employed borrowers do have additional documentation requirements, that's for all loan types, not just FHA. And what might surprise you is that, in fact, FHA loans may actually offer more flexible options for self-employed borrowers in certain situations. To qualify for an FHA loan as a self-employed borrower, here's what you're going to need: 2 years of business tax returns, proof of ongoing business operation, stable or increasing income. However, sometimes exceptions can be made for those with only 1 year of self-employment if you were previously employed in a similar line of work. And when it comes to being self-employed and a 1099, which is what I am, you want to have very frank conversations with your CPA and your lender. Because as a self-employed person, you get to take advantage of certain tax write-offs. But when it comes to getting a mortgage, it may show that you make less money than you actually do. So if homeownership is on the horizon for you, have some conversations with your accountant to make sure you're setting yourself up for success. And if you're an entrepreneur, sometimes cash flow can be a struggle, but there are some absolutely amazing down payment assistant programs that I'm going to talk about in a little bit. So if you're struggling for cash, hang tight. Myth number 7, FHA loans can't be used for certain property types. Many buyers believe FHA loans are only for single family homes in absolutely perfect condition. This myth leads people to overlook amazing opportunities in Gainesville's diverse housing market. The truth? FHA loans can be used for a variety of property types, including single-family homes, multifamily properties with up to 4 units, as long as you live in one of them, manufactured homes on permanent foundations, and condominiums in FHA-approved developments. Side note, this is probably the trickiest category because condos have to be pre-approved for FHA financing, and those pre-approvals tend to change over time. So a good conversation with your lender can help determine which ones will fly. While it's true that FHA has minimum property requirements for safety, security, and soundness, these standards are put into place as a protection to make sure that buyers don't purchase a home with serious defects. What's particularly valuable in the Gainesville area is exploring the FHA 203K renovation loan. These loans allow you to qualify to purchase a home that needs more work because it builds the rehab costs into the cost of the loan. And with Gainesville's older housing stock, especially in the historic district or near campus, this option opens up a lot more possibilities that might possibly be off the table otherwise. Gainesville's market has been seeing an increase in the FHA loan option, especially as we look at affordability and interest rates as a huge hurdle for buyers getting into homes. And remember, I told you that I was going to give you some of the best news in Alachua County and ways for you to take advantage of free money. So here it is. In light of the affordability issues and the rising interest rate, there has been an increased demand in FHA loans. In fact, local lenders have reported to me that there's a growing demand for government-backed loans, especially as the requirements for conventional loans get a lot more strict. There's been an increased interest in FHA renovation loans as buyers begin to look towards older neighborhoods for better affordability. And the approval rates have gotten better as more and more Gainesville properties meet those FHA requirements. And throughout today's video, I've been telling you about all kinds of down payment assistance options that are offered in the state of Florida. But some of the coolest news to come out of the mortgage industry right now are some very special down payment assistance programs, but only for specific counties. But making the list in our area is Alachua, Bradford, and Marion County. According to Parsley, this program is only available for certain counties within the state, and it offers interest rates in the fives. Yes, fives. And gives the buyer a $10,000 interest-free down payment and closing cost assistance. The low down payment option that an FHA loan can provide, in addition to some of these down payment assistance programs, is opening up a lot more doors for incoming buyers in the market. And beyond just debunking the myths that I just went through today for FHA loans, I also want to talk about why they are worth considering in today's market. First is a lower barrier to entry. With down payments as low as 3.5%, you can get into a home with significantly less cash up front. And if you qualify for some of these down payment assistance programs, you might not even have to have cash up front for a down payment. Which in Gainesville's appreciating market, what it means is you could be in a home right now, gaining equity and value in your tangible asset that you're living in, rather than waiting for years upon years to save up the 20% you think you need for your down payment. Second is its more forgiving qualification criteria. Whether you've had past credit challenges or you've got a higher debt to income ratio, FHA loans offer a lot more flexibility than most conventional ones. And you can't forget number 3, which is the competitive interest rates. As we discussed, FHA rates remain competitive, helping to keep monthly payments affordable in a market where most people's budgets are already pretty stretched. FHA loans might just be the smartest move that you didn't even know you had. Especially in Gainesville's market with the down payment assistance programs that are rolling out, now is the time to explore what you could do. If this video helped clear up a few myths for you, imagine what else is out there that you don't know that could save you thousands. I break down more strategies and tips like this every single month because it's my goal to make sure that people in Gainesville, Alachua County, and surrounding areas can navigate this market with confidence. Like the new federal law that just went into place in August of 2024. If you have not heard about BBAs yet, here's everything you need to know before you start house shopping and before you sign on any dotted lines. I'm Lindsey Johnson, your resource for all things real estate. See you next time.